Hello traders and welcome to another video review. Today is Thursday, September 29th, 2022. Let's find out what's going on the Forex calendar. And the Forex calendar looks busy, and during the European session we have some speeches from the ECB officials. As you can see, Panetta, De Guidos, Elderson, McCall, all of them will give a speech during the early trading hours. Then we have a speech from the Ramsden, which is the MPC member, and even the Swiss National Bank Governor Board member Machler will give a speech as well. From the overall data, we need to start with the New York session. German CPI is scheduled for release at 2 o'clock and is expected to increase from 0.3% to 1.3%. Nice big jump to this level. That means, of course, the ECB will have a room for another rate hike. US GDP for the second quarter is scheduled for release at 2:30. It should stay at the same level. Canadian GDP is scheduled for release at 2:30 as well. It should decrease from 0.1 to minus 0.1%. Initial jobless claims scheduled for release at 2:30 as well, almost the same number here. And then we got the speeches from Reserve Bank of New Zealand, or we give a speech at 3:30, FOMC member Bullard, then Mester, then we got the ECB lane to give a speech as well. So plenty of speeches today. Please keep an eye on this kind of events, of this kind of remarks that might trigger some kind of unexpected move. Some data here from Canada, from the US, so we would definitely take a look at the dollar. But first, because of the speeches from the ECB officials, let's take a look at the euro dollar. Daily time frame chart of the euro dollar is showing us a nice bounce, 2.25% towards the level of 9,751. Well, I wish it was a 1 point something, because that would mean the market is trading above the parity, which is not, because the parity is thick black line here and the market is far away from it. After 2.2% of the bounce or a pullback from the downtrend this time, we are now trending a little bit lower. Bearish engulfing pattern was made at a 4-hour chart. So is that enough for a bounce, and we should continue lower? Well, the market keeps doing lower lows. Please notice the fact that we've made, just before the bounce, we've made a new marginal lower low at 9,539. Okay, so this is a lower low. If there's another lower low, then we cannot ignore this sort of the market behavior, as it keeps making lower lows. Okay, so that means downtrend is still intact. Momentum briefly jumped above the level of 50 towards 56. Now it's back under the level of 50 again. So somewhere here around the level of 9,750, the market is testing the neutral zone. So that's the separator from the between the negative and positive sentiment around 9,750. Okay, please notice that as well. So the outlook remains bearish. The market is still under the bearish pressure. We jumped from the extremely oversold market conditions. Fine. We got the bullish divergence here. Fine. However, after 2.2% jump, this bearish divergence might be done, and now we might be going back to the downtrend soon on the euro dollar. Let's find out what's going on the US dollar to the Canadian dollar. Data expected today. So let me just switch to the daily time frame chart, and as you can see on the daily time frame chart, very important candlestick pattern is made here. So what I'm talking about is this. a big rally, right, from 1.2983. It's like a 1, 2, 3, 4, 5, 2 weeks of a rally. Okay, fine. Towards 1.3853, the next technical resistance. The high was made at 1.3832, so that's only 20 pips from that level. However, please notice the fact that this is the zone, not just the one level. 1.3713, 1.3853 is the zone, 120 something pips, 30 something pips. However, nevertheless, it's a zone. Market hit the zone, try to rally, fade, try to rally, fade. This is bearish engulfing, big bearish engulfing pattern. Today we have the inside bar, we have the inside bar, so it's not that easy for bulls to continue, right? So still below the supply zone, still above the technical support, 1.3421, 1.3392. Please notice these levels. They might be very easy for your analysis. And what do we have here on the euro? Sorry, this is the American dollar to Japanese yen, of course. And on a daily time frame chart, we can see the lowering momentum, right? The momentum is jumps up and then goes down, jumps up and then goes down. So the momentum is being right now mostly fading. Basically, it's mostly fading. We are still trending above the daily 30-day moving average. Now the level is 141.50. We made a new high during this announcements and stuff like that on the wave 4. However, we are still expecting wave 5 to be made above or equal to this level, 145.91. So this is the first target for the wave 5. Even 1 pip is enough for this wave to complete. However, it looks like we have first wave on the wave 5, second, third, fourth, fifth wave of the fifth wave, and then we are done with the uptrend. So for now, the outlook remains bullish. We are developing wave 5 to the upside. Please stay focused on the US dollar to Japanese yen. The uptrend on a daily time frame chart, on a weekly time frame chart, and even on the monthly time frame chart is up. The trend is up on the US dollar to Japanese yen, as the US dollar is the biggest gainer all over the board. Is being bought months ago, and it's still the most, the stronger, the most powerful currency in the world, according to the charts. I'm not making this up for you guys. So US dollar is the king. Everything else is virtually in bigger or lower losses against the US dollar. So we expect the US dollar to Japanese yen to move higher. What is the SP 500 doing? As I'm very very interested in this situation here. What do we do here? Well, the bulls defend the lows. We made a marginal new low, 3,601, which is like 33 points below the last swing low. However, this is a very interesting bar. So if today's bar is apparently again green, then of course we might say, okay, temporary support is safe, support is well protected. However, if this line turns out to be more red than green, and it breaks below 3,600, we might say that the bears are back in the game and are pushing the prices lower. Please notice the behavior. We're going down, nice bounce, smash to the ground. Going down, nice bounce, smash to the ground. 4 days of the gains. Consolidation, smash to the downside. Consolidations, smash to the ground. Trying to bounce, some sort of the consolidation. What is the next move of the bears? Smash to the ground. Okay, so please follow these patterns. This patterns looks reliable. This patterns looks correct. This market will keep behaving like this until it behaves like this. So what we have here, 30-day moving average right now 3,937. We are way below this level. We are way below 3,893, 3,921. Those are two levels that consist of technical resistance. The nearest technical resistance 3,726, 3,739, and this is the intraday technical resistance as well. We are waiting for the next candle after the big red candle, the big possible reversal candle on the S&P 500. And last but not least, what is the Ethereum doing? How is the Ethereum doing? Well, let me switch back to the 4-hour chart because there's plenty of data there. And what do we see here is a back of the Ethereum to the old consolidation zone after the false breakout, smash to the ground, consolidation, smash to the towards the demand zone, bounce 1,358 technical resistance, capped the rally, bearish engulfing, local bearish engulfing on the 4-hour chart. Let me just zoom in, and we are back inside the narrow trading range. So we should see another test of this demand zone. If it's broken, if there is a daily candle close below this level, we should test this low from the 22nd of the September at 1,220. And of course, from the upside, we got 1,358 technical resistance and 1,407 technical resistance. Without breaking above these levels, there is no reversal, no bullish outlook for the Ethereum. More likely, this is just a period of the consolidation before another wave to the downside is made on the Ethereum. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.